Welcome to TraderMerlin Show. It is your Tuesday edition. Good to see everybody. Yes, it seems so weird to have only done 2 shows in the past week, but we're pretty much back to a full slate. I may have to take Friday off, but I'll let you know later on in the week as we progress. So thank you, everybody who's joining me today. I know I probably lost a lot of viewers because you're so used to that regularity. We'll try to kick things back to some semblance of regularity. Now, for those who might be new to the program, you can always reach me at TraderMerlin@gmail.com. Of course, thumbs up and subscriptions and the subscription bell is always appreciated. That helps me out as well. So, good. Glad everybody with us. Good to see you, Catherine, Lisa, Terry. We got Big Up. It's Skilled Stocksman. Yes, are you a Scotsman as well? I like the name. Skilled Stocksman joining us today. Patrick as well. Good to see you with us. Big Eb as usual. We've got Dana, Ken, and of course, Les kicking things off from Cape Canaveral. Stefan, what is that icon you got there? I thought it was like beer mugs on your, I don't know what that one is, but good to have you guys all with this. Anyway, all right, here's what I'm going to talk about today, at least the general track for today. I kind of made this little graphic up here called Central Bank Wars. Of course, we know that central banks are always at war, but we've got an interesting week this week with the Australian dollar, the Canadian dollar, and the euro all making rate announcements. And then on top of all that, we have the U.S. market, which, not the U.S., but the U.S. dollar, having a nice little bounce right at a very predictable moment. If anybody watched the Monday Morning Must-Knows from Online Trading Academy, you'll notice when that one was released, one of the talking tracks I had this week was about that dollar coming into a demand, the euro coming into supply, and just maybe some great trading opportunities in some of these currency markets. So we'll talk about that. Sure, we'll talk about cryptos, which it was funny last night in a fit of insomnia, as is usual for me. I woke up at like 4:30, 5 o'clock in the morning and couldn't sleep. So I checked my portfolio real quick just to see because crypto doesn't sleep. And, I was down a little bit, a couple percent, no big deal. And by the time that the morning got going, I made it to the office and everything like 9 o'clock in the morning. I was like, wow. A 35% slide for a lot of these cryptocurrencies. Pretty impressive. So most of them still down around the 15 to 20% mark. Bitcoin having a little bit of a bounce, but yes, we had some pretty significant drawdowns in the crypto space. And the irony is, if you guys were in the CIL, the Crypto Investor Live program, I actually sold one of my positions just because I thought it got a little bit too overheated. I sold one position and with the group there watching, and of course it's the only one that's up today when the market tanked. Gotta love it. Good to see you, Herbert from Zimbabwe. By the way, trivia question for you. The Rhodesian Ridgeback. The Rhodesian Ridgeback is from which country? We have this trivia question, and I like this one because it's kind of a trick question. It really is a tricky one that goes back to what is... The Rhodesian Ridgeback was from Rhodesia, right? Of course, it's the Rhodesian Ridgeback. But where is Rhodesia, or what was Rhodesia? I'll let that one go in there again. Yes, nope, Sisyphus. It's not Hungary. Not Hungary. Let's see what else we got. Did you get your short guns out, Merlin? Yes, a little bit, but not much. A little bit. Unfortunately, I don't short the crypto markets. It's just something I just don't have the guts to do. So I'll wait for see if more answers can. That's a dog, by the way. The Rhodesian Ridgeback is originally from Rhodesia, which was changed to Zimbabwe. There you go. I figured that Herbert would have gotten that one. It's a trick question. Okay, let me go into some of the talk track for today. I've got a bunch of listener questions which steered today's discussion, which flows right into central banks. So for me, that is perfect. Yep, there you go. I see some Zimbabwe guys in there. It's your useless trivia question for the day, guys. Just like how many golf balls are on the moon. There's another trick question. Stupid that there should be golf balls on the moon, but hey, you know what? Guess who landed there first? America! We're going to go golf on the moon. All right, here's the first question as I stop my comedy routine for the day. We look at this one. I was wondering why something, and this is from Rob, who might not be with us today. He says he watches late at night. He's over in the UK, so good to see you, Rob. Let's see. I was wondering why something like the Dixie has technical levels if it is simply a basket of other currencies. I guess the same could be said of any index. I understand that you can buy index futures, but doesn't the price again simply reflect the weighted prices of all the constituents of that index? You are absolutely right, and it's more of a group psychology macro piece that drives those. So, for example, we look at something like the S&P 500. Great. S&P 500 has 502 or 503 components. It changes all the time, but let's just say it's roughly 500. you're thinking, well, why do we use supply and demand zones for that S&P 500 if in fact it's a basket of everything and we're not going to time the exact bounce for all of them? Well, it's because a lot of people are trading indexes and index futures. There's a lot more money in an index future than there is potentially in an individual security. Of course, depends on the security, but generally you're going to get more money in the future side of things. So if I'm an institution, I'm trying to time a market bottom, and let's say something like Microsoft, okay, that's fine. But there's going to be a bigger leverage move if I'm using the futures markets by me trying to time the bottom in the SPY or SPX or SPU, whichever SP product I'm using. So while you're right, it seems kind of like head scratching a little bit like, well, why does that turn like it does? It's because of group psychology. It's because of people like you and me looking at those levels and going, oh, that was a big turning point for this overall index. Therefore, when it gets up to that point, I'm going to sell the individual securities, right? So let's say the way I used to day trade was this. I used to watch the S&P 500 on the tick chart, watching every transaction that came across in the S&P futures pit. And when I saw that thing start to sell off, I would find something that I thought looked like it was in supply or looked like it was going weak, and I would short that. Now, of course, most of the time, the thing that I was shorting was already a member of the S&P 500. So what am I helping the S&P do? I'm helping it turn because I'm selling components of it and helping to push that individual stock down, which is reflected by the overall. Of course, when more people see this, they start selling as well, and you get this quasi self-fulfilling prophecy. So, Rob, that's the main reason why I think you see these things turn. I struggled with that a while back as well, as going, well, wait a minute. You know, the Dow is 30 stocks. Why is the whole thing just turns on a dime? No, not necessarily. But as an aggregate, people are using that as a proxy for the whole market. And if they want to short the market, boom, they go off the indexes, and therefore they start to turn the whole thing overall. All right. The correct answer, everybody, and here's the trivia question for the day. If you play Trivial Pursuit, you will see that their card says there are 3 golf balls on the moon, and being the trust but verify person that I am, I actually went and researched this because I couldn't believe that there were 3 golf balls on the moon, and in fact there are not 3 golf balls on the moon. There are 2 golf balls on the moon because the video that I watched of the actual recording of him golfing on the moon, he swings 3 times, but he misses on one, and he actually hits the ball twice. There are 2 golf balls on the moon. There you go. If you didn't get anything else out of the show today, you got that the Rhodesian Ridgeback is from Zimbabwe, and there are 2 golf balls on the moon. Thanks. I'm here to help. All right, let's see. So let me go a little bit deeper into this dollar index because I think, if it's not mistaken, this is the second question that just came through, and this dives right into our discussion on central banks. Would you short the euro before the rate announcement happening this week? Now, for those that might not know, the rate announcement will happen at 4:45 a.m. Thursday morning for the euro. The answer for me is very simple. No, I will not. I am not a fan of shorting anything or really positioning myself right before a major announcement that I know. So, you know, for example, if there's a central bank rate announcement for the U.S., so the Fed's getting together and they have a meeting, and let's say it's at, 9 a.m., I'm probably not going to build a position in the equity markets or in a currency market because I just don't know what's going to happen. We can build a hypothesis about what's going to happen, but then, you know, all hell breaks loose and things go the exact opposite direction. I mean, you've seen it this earnings season. I saw a couple, I pointed them out to you. There were some companies that reported, 50% increase in their sales, and their earnings were a huge blowout. The stock was down 10% on the day. You're like, wait a minute. You shattered everybody's expectations of where this thing's going to go. I mean, blew out expectations, and you still got slaughtered. I don't trust it. So I'd much rather trade the actual news as opposed to the anticipation of some news. So, Tim, I absolutely would not short the euro before the rate announcement this week. That said, let's go look at some price charts of some different currencies and get maybe the euro. The Canadian dollar is also going to be a good one. Today, of course, you guys saw the Australian dollar, which had a pretty nice move starting about 9:30 p.m. my time, Pacific time, last night off a rate announcement. And I watched that one for a little bit. Thought about making some trades, but I just had too much going on. I thought, no, I'll go back to watching TV. So here is what we had cooking on central banks. We'll start things off with the Aussie dollar since that was last night. You can see that we talked about this one in the past, right? I think pretty much last week we were off, but the week before that talked about price rallying up and coming up into these supply levels and said, if we get above this 74 mark, there's a pretty logical point right around here, around 74, 75. Came and hit that one on Friday's session. So really rallied up, popped it, and then has been drifting down ever since. But that's not the main one, right? That is not the main reason why I think you're seeing the Aussie dollar flip. It's not just that the Aussie came into supply. It has a little bit to do with their rate announcement. You can see here, if I break this into, let's say, a 5-minute chart, you can see right where that rate announcement happened. That's 9:30 at night. It spiked up and been drifting down ever since. Now, the irony is there was no real rate announcement change. It was expected to be 0.1%, came out at 0.1%, and that's pretty much it. Patrick says, Aussie dollar buy, right, Merlin? Well, I have an issue with that for one reason, and we'll get to it in a hair. It looks like, if you look at this chart here going back into mid-2020, or earlier this year, call it March, you can see it's lower highs, lower lows. The only real saving grace is this most recent pop and breakout above kind of a short-term high. So it looks positive. It certainly looks positive. That said, to me, it's really all about what's happening here. All right, there you go. It's about the dollar and the dollar index. And this ties back to Rob's comment earlier about the dollar index. And I'll see if I can bring up multiple, because there's two different dollar indexes here. This is the Dixie, the one that most people follow. The Dixie obviously is critical in the Forex markets because it seems to be the dog that wags the tail. And we talked about this one as well. I've had this yellow box drawn in here for the better part of a week and a half now, which was, look, I feel like we're selling off. If we get down into this area, that's a logical point for this to turn, and it's been on a fairly nice rally since mid-May of this year. So the Dixie getting stronger, finally broke through these highs from March, looking good, and then, some might call that a bull trap. It comes back down, retest. I'm actually bullish on the US dollar. So, Patrick, if I'm bullish on the US dollar, that inherently means I'm going to be bearish on the Australian or the Canadian dollar. I think you put the Aussie. I would be bearish on the Aussie. And I'll bring that one back up here. So here's your Aussie. Okay. If I think that this dollar is going to be getting stronger, that means that Aussie is going to be dropping down and selling off. So most of these other currency pairs, I'm pretty bearish on. Same thing like the Euro USD, right? Euro came right up into supply. I mean, that was a beautiful move, right into an area of supply. It still looks weak. It's still making lower highs, lower lows. It came back up to a previous high, even though it looks like it's shown some strength because it got back up to this most recent high from back in July. Still feels like this is going to be drifting down primarily because the dollar looks like it bottomed, gaining some strength here. And if we can get that dollar to break above and get to that 94 mark, I think that if we get that 94 mark, I think you got a lot more upside movement here for the dollar index. And you can see that we haven't been above that 94.75 mark for the better part of a year now. So it'd be interesting to see if this what looks like an ascending triangle kind of starts to pick up more momentum. You got a double bottom most recently. A lot of positive signs for the dollar index, regardless of how I feel about fiat currencies or the US dollar. This is just showing some strength right now, and you could almost see it coming, right? Came right back into this demand level. That means that the euro is probably selling off, which I see that here. That means that the Aussie and also the CAD selling off. The Canadian dollar had a pretty sharp move to the downside today. Now, for this, there's the central bankers are really the ones that are the orchestrators of these big volatile moves. Now, I find it kind of interesting that the U.S. market would let the dollar rise. Obviously, when you have as much debt as we do, paying it back with cheap dollars is the best thing. It's also great for exporting. But we've been seeing that dollar index slowly rise. And what kind of makes me shake my head a little bit in curiosity is, if we're printing with such reckless abandon so much money every single month and buying mortgage-backed securities and treasuries and just printing with stimulus, we should be seeing a much weaker dollar. So I don't have an answer for you exactly on why that is. It seems a little bit odd to me that these things would be almost tweaked and twisted like that. But bottom line is, I'm not going to fight what the chart says. The chart right now for that dollar index says things are bouncing, could potentially see a nice move up here. It didn't even make it to a previous low, and over the past 3 months, it's made a higher low. Over the past 6 months, it's made higher lows. So looks good to me. I'm strong along the dollar, which means I'm going to be bearish just about everything else. Let's look at the British pound, which we did not talk about. Out of all of them, this one looks okay. I mean, you had a double bottom on the British pound about 2 weeks ago, 2.5 weeks ago. But still, to me, it looks like it's traversing sideways. All right, what do we got here? Merlin, you're an interesting character. What's your Myers-Briggs personality type? You know what? It's funny you should say that, Alpha. I interviewed the guy from Myers-Briggs for Online Trading Academy, and I did take the test, but I don't remember what my personality type was. I am who I am. Wasn't that Popeye's favorite? It's like, I am what I am. Yes. And I saw a comment about Thrive. This was probably the best trading event I've ever been to. I thought Thrive, and I don't say that as, oh, he works for Online Trading Academy, he's just pumping up his own company. If anybody who was at Thrive, it was a lot of fun. It was a great event. It was so nice to see a lot of the students, but also just the sheer degree of instructors who were there just giving it all the education that they could. We just had such a fun time together. I'm hoping at some point we can get back on our feet and have another Thrive event out in Las Vegas. That was just really a great time. All right. Yes, big bearish on the Aussie. It's all right, and it's only temporary. Take it on, personality hacker. Okay. I'll just go watch the video because I did take it and they gave me the full. It's like 10-page analysis or something. I'm like, I guess I don't really care too much about my personality type. Of course, saying that, I've lost a lot of friends over the years, so maybe I should get it. Canada sucks. What is wrong with that country? Well, hey, Patrick, I disagree. I think Canada's awesome. Every country, every government, all has problems. I mean, people love Italy too, right? I lived in Italy for a long time. God, what a mess. Such a great country, but what a political, I hate to swear on the show, I know some people hate, it's a shit show. It's so bad over there politically. And then you look here and it's like, well, are we much better? Oh, Canada, are you much better? You throw politics in it and all the beauty from a country can disappear right away. But bottom line, there's some great things up in Canada. Don't get down on yourself, buddy. Just try to trade it to your advantage and make some money on it. I think the whole area from 93, 94 is still heavy from the US dollar on the weekly. Cool, Drew. Let's check it out. USD. 93, 94 on the weekly. Oh, yeah, I wanted to show you something else here, too, because I get this, I got this top line of this 94,775, but you were talking about the 93, 94, and that's this clump. Yeah, the one we just smacked into, right? Yeah, I like it. I'm looking at this picture, and it feels like it's starting to get some strength. I'm not saying it's real strong. I'm definitely not saying the dollar index is real strong, but it feels like it's getting a footing. It finally stopped that big sell-off we saw in early 2020 and stabilized, and now maybe starting to creep its way back up. So there you go. Yeah. But way to go, Lisa. It says fill in the politics equals fill in the blank. Great. Now I'm gonna get banned from Google or from YouTube for profanity on the show. Thanks, Lisa, for throwing that grenade in there. What did I learn at Thrive? Well, from a trading perspective, it was kind of difficult because obviously, I've learned. I don't want to say I've learned everything. That's way too arrogant. I've learned a lot. I just like watching different presenters present and seeing how they presented. Also, actually, I have to say, I like watching people present who I have a very strong disliking for and picking them apart. There were certain people there who you guys know I won't allow on the show. He was presenting, and you talk about somebody who's so one-dimensional, who can only talk about one thing. You ask him about anything else to do with financial markets, he doesn't have a clue at all. But I talk about supply and demand, and that's all I know. It was great. And then you watch other people. Sam Evans was probably one of the most entertaining and just brilliant presentations at the conference. There were quite a few. I actually really enjoyed Jeff Manson's presentation. There was a few that were a lot of fun. So it wasn't one thing in particular. It was a great opportunity not just to hang out with fellow instructors, but also to be involved in communities and give back to a lot of the instructors. I really had a good time. Yeah, Lisa, it was I think it was a small, I don't remember exactly who it was for. I wasn't involved on who was invited to it, but it was just for Online Trading Academy, but it was great. Yeah, anybody know the Myers-Briggs? Let's see, what else I have here? I think you're an ETJ. I'll write that ETJ in. I'm pretty sure I'm an E something. ETJN. Or ENTJ. My dyslexia is kicking in. Apparently I got dyslexia today. All right, let's go and continue on here. So again, this was all spurred by Tim's comment about would I short the euro. I would not. For those that don't know, I'll bring the chart here again. You had, obviously today was a rate announcement for Canada. Here's your weekly. We'll switch it back to a daily. This is the Aussie, excuse me. For our neighbors to the north, Canada, Patrick, this is your day tomorrow. At 7 a.m., you're expected to have a rate announcement. 25 basis points is the expectation. My guess is you'll probably stay the same. And then on Thursday, we have the euro at 4:45 in the morning. That's all Pacific time. Now, is this good or bad? Should we, what do we make out of it? Well, bottom line is this. Given what happened with the Jackson Hole Symposium and a lot of the central bankers feeling that, hey, we need to stop spending, we need to stop this whole mortgage-backed security purchases and stop buying treasuries. In essence, we need to stop holding down the yield curve, which I thought was really interesting. A lot of them are saying, October could be the time. And even Powell echoed that. He said we may have to. Rate hikes, no. He says we're not going to rate hike this year, but we may start to taper off of our purchases. And if that happens, you'll start to see some of the yields go up. And of course, rising yields slows down economic growth. Rising yields slows down the housing market. And then we might start to see this a little bit of shift from this perpetual 45-degree up angle we've had since 2009. And maybe get back to some semblance of unmanipulated normality in our financial markets. All right. Canada Day, it's right. I'm learning about trading the Russell. Can you look at it? That and give me some education. Thanks. Sure. I mean, as far as education, not really a lot to go on here. I mean, Larry, you've been watching this show for quite some time. I mean, this yellow box that I have here on the Russell has been there for, I don't know, how long, guys? 6 months? It's just been traversing sideways. So I'm not saying there's any sort of real specific strategy here. For me, that you have 5 choices to make here with the Russell 2000. This is your RTY. Number 1, you see that top line there at 23.49. Call it 23.50. If you get to 23.50 or somewhere close with your trading style and risk management, that might be a shorting opportunity, thinking that's going to hit that top end of that range and come bouncing back down. If it comes near the bottom of it, right, you can see down there, there's the 2087, also the 2110 mark I've got mapped out. That might be viewed as an area of demand where you look to be buying the Russell 2000 and play inside that range. If it gets out of it, okay, if it gets out of that range, meaning above 2350 or below 2087, then you're either going long above 2350 or short below 2087. Keeping it very simple. That's 4 possible scenarios. The 5th one is don't do anything. It's inside the range, wait for it to break. But, almost a 300-point range is pretty big. FX Green says Iron Condor. Sure, we could start using all kinds of spread strategies as well, but that's getting much more complicated. In its simplicity, you could build a strategy around that zone I have drawn, and if you have been using it, you've probably been making pretty good money on that sideways bet. It's not common that you see an index go sideways for 9 months, and this has been a 9-month sideways action for the Russell 2000. So let's see, what was the comment? What does it do? The yellow box, Larry, it doesn't really do anything. It just creates a visual kind of think of it like a playing field for football, right? I know the boundaries. And in essence, that yellow box is just showing me the boundaries that the Russell has been constrained in for the better part of 9 months. Now, I don't know why, I don't know what, I don't know who or where or when. All I know is it's stuck in that picture, right? We could all hypothesis about something. We could all hypothesis, the Russell's doing this because of X, Y, or Z. Who cares? The bottom line is the Russell is just traversing sideways. So let's play it. You look at something like the NASDAQ, and, the NASDAQ just continues to move up. I had a short position on it. It got taken out, which kind of frustrated me, but it's okay. It hit my stop loss dollar-wise. The S&P one, I'm still in short. And, I'm looking to go short on that NASDAQ, but look at the trend, right? We had a little yellow box. It broke out of it. Same thing I'd say with the Russell, all right? Breaks to the upside, go long. I just expected after this little doji here to have a hesitation. It hesitated and then just continued to rally up. Yes, Russell is small cap, so basically it's 2,000 companies that have a small market capitalization. I don't know what the capitalization cutoff is, but you look at something like the Dow Jones Industrial Average, those are just the monster, mega cap, gigantic market capitalizations, the blue chips, if you will. So that's pretty much it. Yes, Richard, we'll look at some gold here in a sec. But that's pretty much it. I love the yellow box. It makes it easy. Guaranteed it stays in the yellow box until it doesn't. Exactly, John. I'm going to guarantee everybody. I guarantee you, 100%, call the FTC, call the Federal Trade Commission, say that Merlin guaranteed you that the Russell will stay inside of that yellow box until it doesn't. There you go. That's my guarantee for you today. And the beauty of it is you can hang your hat on that guarantee, right? So trade it within that range, and as soon as it gets out of that range, you got to close out your trade, right? Get in the right direction. Now, it could be a head fake if it breaks out, but anyway. How the analysis dialed in, I've been trading ES. Larry, he says he's been trading the S&P, the mini S&P. It's all the same. you're basically saying, what is price action doing? Now, of course, it's nice to know that the Russell is the RTY, and you have the S&P and the Dow and the NASDAQ. That's all great. They do tend to move together as for the majority of the time. There's going to be a fairly tight correlation between those four indexes. The weird part about it is for the better part of 6 months, the Russell has really done nothing. I mean, when you look at this compared to the other indexes, it does feel broken, which is a warning sign for a lot of traders. Here's the Russell. And then there's the NASDAQ, which is making higher highs. S&P, higher highs, higher highs, higher highs, higher highs. And you have the Dow. The Dow actually starting to look a little bit weak, right? It's just kind of slowing down, going sideways. But still, they all look better than the Russell. So, hey, you know, if everything starts to break down, I'll probably look to short the Russell. I think that the Russell will be your first canary in the coal mine. If it gets below that 2087 mark, then likely to see the NASDAQ, S&P, and Dow fall as well. All right, let's see. I'm going to keep going through questions here because I want to make sure I get through all of your questions that came through before I get too late on the show. I wanted to revisit this one real quick for Jeff, who I think Jeff might be with us here today. He says, my question is, since there's over 11,000 cryptocurrencies out there, how in the world do you do research when making a sound decision, to make a sound decision when buying? Okay, so this is actually part of my topic for tonight's Crypto Investor Live program starting at 6, going from 6 to 8. We're going to look at stable coins today. And you're like, well, stablecoin, who cares? They're all the same. No, they're not. You know, they all are intending to serve the same purpose, but they are constructed mechanically very differently, and some have high risk, some have low risk. You might be able to earn higher interest yields on others versus one another. So I will look at the same way. I kind of line up all the different prospects. I'm not making this about cryptocurrency. Tonight's session obviously is about cryptos. But if we look at something like home builders, right? You could say, oh, I'm interested in buying a home builder stock. Great. What do I buy? SHB. Or I could go buy Toll Brothers, or I can buy Lennar, or I can buy KB Homes, right? I can Pulte. I can buy any of those four. But are all four of those the same? No, they're going to be managed differently. They might be in different geographical areas of the country. They're going to be doing different things, maybe different style of houses or residence structures. You know, maybe one's multifamily. So, you know, when we look at not just crypto, but anything that you want to buy, one of the things I like to do is look at their peer group, right? Who's their competition? Who do they run with? Generally, there's going to be something that companies run with. You look at semiconductors and chips. Great, you can name 5 or 6 probably personally. Well, they're not all the same. There's a lot of characteristics that are similar, but that's kind of our job if you're looking at the longer term picture, as I am with a lot of cryptos, is which one do I want to hold on to for the long haul? I need to find the one that I think fits what I'm looking for the best. It might not be what you're looking for. Meaning, for example, if you look at something like cryptocurrencies, do I want a centralized stablecoin or a decentralized stablecoin? Do I want one that's backed by fiat currencies or derivatives? These are all considerations we have to make, and that spreads across all sectors. Whether I'm looking at automated market makers, I'm looking at oracles, semiconductors, chips, housing, whatever. All right. Alpha Intelligence, most are junk, but they're a necessary evil. Stablecoins are critical for the cryptocurrency market, which again will be our topic tonight. All right, Lee says, please look at oil today. Still bearish? Oh boy, oil got hit today, 1.3% slide. Here is your oil chart. Still not horrible, right? You had that breakout we talked about. So there was a line that was drawn here. I got all kinds of lines. Let me get rid of some of these bad boys. We broke above this high right here with this bluish line. It looked like a bull trap. Boy, it just went up above it and the next day came ripping back down. Now, I mentioned that I am bearish on this. I am bearish on crude oil. I still think that the supply increases are going to get pulled back at some point, but nonetheless, they've increased supply, and I don't see anything with the Delta variant really impacting summer quite yet. That was kind of maybe felt a little bit overblown. So in that respect, yes, I am still bearish on oil, although not as strongly as I was about a week ago. I would say last week I was definitely much more bearish on crude oil, but I still overall am bearish on it. So right now, it's interesting. It came right back into this little area of chop, right? It really has not done much other than this one big green day that we saw on September 2nd. It's been just really choppy. Good news is you had high volume today, which shows there's some excitement in crude oil. But I think a lot of this having to do with the dollar index, right? If you look at the Dixie, you had a nice pop up today in the dollar. That, of course, is going to have a little bit of an impact there on crude oil. And also on gold. Here's gold today, ripping back down sub 1800. So you had almost a 40-point drop in in gold today, which made it exciting, especially given the tick value here. High volume, right? Higher than normal at the bottom. You guys can see there. If you go back to September 2nd, you only did. Oh, where's my volume? I gotta go down here to see the volumes. It's so funny the way that TradingView works. It was 113,000 contracts were traded on the 2nd, and today you had 248. So you're over double the volume from just September 2nd alone. So pretty emotional-driven sell-off today for gold. Although it is coming right into an area. I think 1780 is a pretty good buy point for this most recent uptrend that we've seen off those August lows for gold. All right, so let's see. One more question I think I had here, and then I'll get to the viewer stuff. This is from Tyler. Take a sip of water real quick. He says, I shorted 2 Dow futures today on the break of 35.2. Target is 34,000. Thanks. Okay, I'm questioning you're probably in the micros. I'm assuming you're in the mini, sorry, the MYM. If you're in the full-fledged contract, that's some pretty big capital outlay you're doing there. You're looking at, I think, if I'm not mistaken, I think the requirement for a full YM contract right now is 9 to 13 grand, depending on which broker you go to, if you are holding overnight, and you can get it for about $1,000 if you're trading intraday. So 2 of those overnight, you're looking at $20,000 plus just in margin requirements. So first off, nice. It's a pretty big trade. You might be doing the micro or minis, but who knows? But let's go take a peek at the YM here. And when I look at this chart, you shorted the Dow futures on the break of 35.2. So I'm going to put a little line right there. I'm a little nervous for you, I'll be honest. I'm not. For me, this is probably one I wouldn't take. But there's the blue horizontal line is that 35.2. And if we put a target, you said 34. I think personally, and I don't take this in the wrong way, sometimes I'm tough love, I think you're being a little overly optimistic. I think that you're looking at a kind of a knee-jerk reaction to the Dow selling off today. Could it go down to 3,400? Yeah. But you're certainly going to have a heck of a time getting below, let's call it 34.8, right? You've got some issues over here before you get down to this 3,400 mark, or 34,000 mark. Now, if you get to that 34,000 mark, that's quite a bit. It's $5 per contract, $5 per point. So you're looking at a total of 1,200 points times that. That's a $6,000 move per contract. So you're basically looking to make 12 grand in this one. I hope it gets there for your sake. I mean, that'd be an awesome trade for you to make. But it feels like it's way. I agree with Stefanik. It looks a little bit low. It looks a little bit low, and I'm not really feeling it right now. If you look at the overall trend, what's been going on with the Dow? Looks great. I probably agree with you, Tyler. I think that the Dow and these indexes are long overdue for a sell-off, and it could happen. And you might be totally right, but you're just kind of jumping the gun, I think, a little bit. Going in on this break below 35.2 is pretty aggressive in my book. But hey, you means it's just going to be earlier to the party than I will. That's fine. I mean, hope it all works out for you. Bottom line is you better have a stop loss in this one. And the question is, where's that stop loss going to be? This most recent congestion here, do you go right above that, or do you go at the all-time highs and say at a break above 35.6? Well, if you do, that's a 400 pip or 400 tick move. 400, it's 2,000 per contract. You got 2 of them. You're looking at it's $4,000 loss. Is that something you can stomach? Right? That's a pretty big chunk of change to be jumping the gun on. Right? Getting a little bit risky there. So I don't know, Tyler. I'm a little bit skeptical on it. I appreciate you taking it and going for it, but just make sure you have your stop loss in place. And I don't know how much you're willing to risk on this, but you don't want to risk too much, man. This thing could just keep on ripping up as all these other indexes have, except the Russell, going forward. All right, what else do I got here? See, a whole bunch of chatter coming through. 20K for 2. Yeah, I think it's 20K. I think it's funny. I think if you go to the CME, it's 9,900 or something like that for a full contract, and then I think that it's just 1/10. So it's like $900 for 990 for the mini, and then it's been a while since I traded the Dow. Trying to remember all these futures point ticks is tough sometimes. But it's funny. You can shop around. You shop around a lot of different places and get better rates. But the CME is going to make it a floor at 9,000. I used Trade Pro futures, and they give you some of the best rates out there, but even that is still higher than 9,000. All right, let's see. What do I got? Question-wise, Just got your VIH. Do you think this is a short squeeze? Is a trap? Let's go to VIH. Who knows with this one? I hope it is. I mean, I hope it's not. I hope it's going to go all the way back up. I'm still holding. You guys know I own 1,000 shares of this from $15. So I'm still way underwater on this thing. It's not necessarily it's a trap or a short squeeze, right? If they actually are doing something actionable and making good on their plans to merge with BACK, BAKKT, the sooner they do that, the better it will be for the end results. Right now, I think it's just not sure what they're going to do. Did they hit some snags regulatory wise? I don't know if they're going to make the merger happen, but certainly the action today, where it jumped from, at least the past few days, jumps from $10 to $12.50. That's a 25% move up. I'll take it. That's nice. I mean, we're at $11 right now, so I'll still take a 10% increase in a couple days. But I don't know if I'd necessarily call that a monster short squeeze or anything like that. I'm still holding it. So sorry. I wish that this would continue to move further to the upside. Who knows? It's a crazy one for sure. Let's see. 1 second. I got to go back to NJ. My regulars over here. It says Clove, CLOV. Yes, the old Clover Health Investments, which was a SPAC, by the way, and they finally finished their SPAC. What's your input on Clove? I bought options on December, expiration 11 strike, when the stock was $8.80. How you feel? Should I ring the bell and take profit and catch it if it goes down? You look at this move that happened on it today. That's a giant move on big volume. I would have to go and research exactly, what was the talk track? Was this some announcement that came in? Was this, I don't know what caused that big move. Certainly there could be more upside potential. If you got 8, did you say you bought them when it was at 8.80, you bought the 11s, you got some great profit on your hands, especially if you got December, which is a ways away, NJ. So you're doing great on this one. It's really up to you. It actually, for me personally, it looks like it's going to keep going. It might have a little bit of a pullback, but you notice that the past few days, past two weeks, it's actually, let me rephrase that. Since July, it's found a base and has just traversed sideways, right? And now all of a sudden it feels like it's getting a footing on it, breaking through some highs, which may be triggering, maybe some short covering that's going on there, a little short squeezing. Don't know, but it looks relatively bullish. Maybe you get another day of it and then start to lighten your load here. I don't know how many you have on this one, but if you got a bunch, I would probably sell out of a little piece of it for sure. About crypto that's available on Gemini. I only buy crypto that's available on Gemini or Coinbase because those are the only platforms I'm using right now. There you go. Well, that's what you should be doing. I mean, stay with exchanges that are easy for you. I'll give you an example. I have Civic token. I don't know if you guys saw Civic over the weekend. Holy cow. So Civic is one that I bought $1,000 worth of it back in 2017. Let me add it to the portfolio here. CIVIC, Civic, and we'll go with Civic versus Tether. I want a major exchange. I want something that's in USD. Civic US dollar from Poloniex. How about we'll add that one in there? So this one just went absolutely gangbusters, down 25% today. But check out what it did over the last couple days. 1 second as I move this to the crypto folder. Here is Civic. This thing hit $1. My entry price is way less than $1. I bought way back here when this thing was just a penny. Sub penny. So it's been a great one. Like I said, I bought $1,000 worth. It's a lot more than that now. It's an identity token. And this is kind of one of those examples of, when things are running up, you want to dump it. Now, there aren't many exchanges that allow you to have Civic on it. At least there wasn't up until, 3 or 4 months ago. So I have an app on my phone, which is I think it's on the Jax app. So in order for me to get it off this wallet and move it somewhere, I have to go through another application to get it off this thing, and I have to use Ethereum, and it's $280 worth of Ethereum because the gas fees are so high in Ethereum. So I'm literally keeping this here until Ethereum rolls over to Ethereum 2.0 and it saves me a bunch of money to transfer it off. It's stupid, and it's great because it goes right back to your comment, Catherine, about I'm only buying on these major exchanges. Great, because if you go to some other exchanges or wallets, it may cost you a lot of money to move it off of those wallets. Definitely one of the considerations you think about when you're trading crypto. How are you bullish the dollar? Can you go a little more in depth if you have? Well, you're talking about the dollar index. So let's go to the dollar index. I'm only bullish because look at what it's done. this looks like just a pullback into an area of demand, and now it's starting to rip out again. So you have impulse, correction, boom, and that creates the demand area. Impulse, correction into the demand area. And to me, the next impulse could rocket to 94 or higher. And the main reason for that is it's been sideways since June of last year, just traversing sideways, and it's finally got a foothold. It's finally starting to make higher highs, and the lows are getting higher. So it just feels by visual here that it's building strength. And to me, that's great. I want it to keep building strength here. Well, not to say want it, but I'm accepting of it building strength, because if this goes up, that means that I could be making money in specific directions on other currencies or commodities that are representative of that dollar or affected by the dollar. All right, let's see what else do I got. Hey, no problem, NJ. Good to see you. Thank you. I'm heavy on clove, already green. Good. Excellent. Stop at 705. I almost got up 8 when it hit $3 to buy lower. I think it would retrace. Yeah, Walter, same thing. I actually was funny because I was going to buy some more today. Instead, I bought some chain link today, which I'll probably buy some more chain link for my students tonight so they can just see that process. But bought a few $1,000s worth of chain link. We'll add some more to that one as we go. All right, what time we got? Holy cow, we're doing hour shows again? I can't do that. Is Sol moving up based on NFT strength or what? Yeah, this is really the story, guys. So I told you I dumped one cryptocurrency, and then this one is the one that I dumped, and it just has been ripping. I mean, it's just frustrating. You can see the horizontal line there. Actually, I'm out at 139.69, so I'm a little higher than that. I'm right about there. So I got stopped out of back here. It's going up for a couple different reasons. The main reason, Big Ab, is because of its perceived scalability. Now, I haven't seen any documentation really that verifies it, but the talk track right now is that Solana can do 50,000 transactions per second. Right now, Ethereum can only do 15 transactions per second. And even if they do this next upgrade and roll over to proof of stake, they're saying it's going to be a factor of 100 improvement, which would get us to 1,500 transactions per second. Still, nothing compared to what Solana can do on their base layer right now. So Solana is rocking because now all of a sudden, not only is it the smart contract side of things and NFTs, but it's a scalability aspect. And anybody who's looking to do lots of transactions on a easy system, if you will, easy system might not be the right word, looking to do lots of transactions in a system that can accommodate that on the base layer without issue, that's really critical. And one of the programs I bought into is there's Synthetic Exchange and a couple others that are looking at doing business on rewriting their programs for that and moving away from the Ethereum blockchain specifically for transaction perspective. So what a lot of people are feeling is that the change may actually move people away from Ethereum onto more scalable solutions, which I've been talking about scalability for a long time, and that's the reason we've been seeing it go up. Good, Big Ab. I thought about adding some more, but my Cardano position is pretty big, and I'm certainly a fan of Charles Hoskinson, which a lot of people seem to be bad-mouthing to no end. You can really see how the Dixie reversed. Yeah, I mean, the demand zones, we look at them on the daily, but the weekly certainly shows it as well. Here is your weekly. I mean, really, to me, it just looks more like a hesitation. It's the bigger weekly demand, this double bottom that formed in December of 2020 until one in May. That's a nice piece. But I like, from an active trading perspective, I'm going to be looking at this guy right here saying, all right, I like this double bottom as well. Sold half my Cardano at 286 Saturday. Put in Solana, 137. Saved myself a big hit today. Yeah, awesome. Cool, Chris. Good for you. Solana certainly is got the hot hand right now. I mean, they are the cat's meow, if you will, and everybody's talking about Solana. Just be careful. The reason I dumped it here at 139.70, 139.69 is you look at something that moves up that far that fast. I mean, I paid $30 for it back in July, and I got out at 100. I'm calling 140. Those types of moves generally have pretty big pullbacks, and you guys saw me do this one as well with Ethereum, right? You guys might remember if we go to the daily, I jumped out of Ethereum back here at like $3,500, and all of a sudden it rallied to 4,400, and I'm like, damn it, I missed that boat, son of a. And then what did it do? It cratered. Now, I'm not saying this is going to crater like that, but I ended up, fortunately for me, buying back in much cheaper, so I was able to build a bigger position. So just be careful when you buy something that moves up that far, that fast. I'm kind of kicking myself a little bit that, oh, well, I should have gotten out of some of my Cardano. I mean, Cardano had just a beautiful run up. But if you think about it, one move today gave back about 2 weeks worth of gains. That's a pretty substantial chunk. Litecoin was another one that gave back a lot. And this one's great because we were just trailing sideways. We broke out, felt the move going up, and then all of a sudden we're right back in the middle of that yellow box. One big break. All right. I took images of everything that was going on today, but I didn't bring them up for you guys. Gotta love that. That's what I get for moving too fast. I guess the main thing would be this one right here, which is your economic calendar. So this is kind of the important pieces that happened today. You see the German ZEW, the number dropping, not good. These are pretty good measurements of health of the European economy. Did not do very well. It looks pretty weak out there, so I don't see that changing. Now for tomorrow, here's what you've got, since I didn't put it in my cute little PowerPoint that makes me look all professional. We have to do it the old school way and look non-professional. Here's that rate announcement. Canada tomorrow, 7 a.m. They're expecting 25 basis points. I don't think you'll see a change from that. It's really more about what do their central bankers say about their rates going forward and the topic and discussions about inflation. For the U.S., you don't have too much. You got the 10-year bond auction. You also have the beige book numbers and consumer credit, and that's pretty much it for tomorrow's action. Now, as far as earnings go, really not a lot to talk about. There wasn't much today anyway that made me feel all warm and fuzzy with regards to earnings. I think it was Coupa Software came out with earnings, and they beat pretty handily. They did rather well, but good for them. I mean, does anybody here trade Coupa Software? I'm guessing that's a no. Tomorrow, you do have one that I think a lot of people are happy about, which is Lululemon will be reporting earnings tomorrow, and also GameStop. We haven't talked about GameStop in some time. I still am marveled at the fact that it hasn't just cratered yet. And it's probably due to the fact that they have refinanced themselves and put themselves in a better financial position. But there's the Reddit. It's hard to believe that the Reddit frenzy was back in February of this year. It just seems so long ago. But yeah, you're still up at 199 on GameStop. They're reporting earnings on tomorrow, and that will be, I believe, that's going to be after the close. Let me verify. Yes, after the market close for Lululemon and for GameStop tomorrow. So that is mainly your stuff to pay attention to. Cool. So that's pretty much going to be it, guys. I got a bunch to do tonight. I'm going to be getting ready for the crypto class. For those that are there, I will hopefully see you in that session. If not, I will see you guys tomorrow. I don't have a topic or a guest. I have done a horrible job of finding guests for the show. Maybe I'll scrape somebody up and get them on the program. If you have someone you want, do me a favor. You can email me at TraderMerlin@gmail.com. Let me know who it is you'd like to see on the show. I know I've got to get somebody. Probably Brendan doesn't even watch the show anymore because I didn't get Steve Manarino on the program. But one of these days I will, and maybe he'll come back. All right, everybody, that's going to do it for me. Thank you so much. Hope you guys enjoyed today's show. Be safe out there. The crypto markets are wild, and you got some major announcements rolling out here with regards to economic data and central bank stuff for the remainder of the week. So be careful, and I'll see you guys tomorrow. Take care.